All right, what's going on, everybody? Good morning, good morning, good morning. I hope everyone had a good day yesterday. Let's get back at it for another big one. Let me just make sure everybody can hear me. If you can hear me, please drop something in the comments so I know. Also, if you would like, comment, share, do whatever you got to do, would appreciate it. Once I get the green light, we'll get going here. All right, great. Thank you there, Seeker. All right, so let's get into it here. Let me just get ready to share screen and we'll get on our way here. So we just had that morning data, which was GDP. We have more data coming at 10 a.m. as well. So let's just come on over here and okay, we should be all right with the sharing. Very good. All right, let's go with, it'll be a little more brief today, but our little market overview. All right, so first and foremost, as you know, we are inside that weekly bullish fair value gap. So far, starting to leave it. That's encouraging for bulls to show some immediate reaction to that level. Sliding over to the daily. As expected yesterday, we kind of had that low probability, choppy type of day. A lot of red folder data to end the week, and we didn't get much of anything. But this morning already, look, you'll see how we are reacting already off that data. Looking for this daily fair value gap. I think that's what's coming first. There is following that level, like I said yesterday, that's going to kind of be an off limits area for me. I would not be shocked if we actually got a rejection from that point for a deeper retracement into that weekly fair value gap. It's much more clear if you were to take a look over on ES, believe it or not. So here's our hourly chart for NASDAQ. This imbalance right here is on the 4-hour. This is what we got into yesterday and just kind of, bounced and hovered for a little bit. We actually got deeper, took out that low from yesterday, and so far the descent, or we've been making that move back up to the upside here. So that daily imbalance begins at the hourly begins at 20,080. The daily begins at 86. So right up here. Boom, there it is. And even on the smaller time frames, we have relative equal highs right here. So I'm kind of anticipating those getting hit relatively quickly, maybe even before the market opens here. That's up at 29. But to show you guys what I meant by ES being a little sketchy on these lows, and if you were just to take a look here, see these lows right here? Those are really sketchy. A lot of liquidity resting down there. Also worth adding that following that daily fair value gap on NASDAQ, I would not be shocked by a retracement back down lower, because if you come on over here to ES, you're going to notice that we've also not gotten into the weekly fair value gap here on ES. And ES is SPY for anybody who might not follow futures and all of that. So just, worth noting that we have not touched that just yet. On the weekly time frame. So I would not be shocked by that. Clean up those lows, get into that imbalance, and it's really not all that far away. 42 and 11, so 53 points, not really all that far away. But following that daily level here on NASDAQ, I would not be shocked by that. But this is where I'm kind of off limits a little bit. I would consider this, or I call these, showtime imbalances. This is where I can kind of see it shake out either way, and if it were to do so, so be it. I'm just kind of have to wait a little bit. I could even look for shorts if I wanted to. I would have to do it on a smaller time frame, because this imbalance here is pretty big, and the stop out where I would place my stop is really high, and I wouldn't want to take all that much risk on that either. So it is a pretty big range. One more thing to add on just a general overview is the dollar, DXY. So in a perfect world, the dollar is like the greatest indicator, specifically when you're looking at the indices. So again, in a perfect world, we would anticipate a weak dollar leading to a stronger market, and vice versa. A weak dollar, and we would expect a strong index, whether it's NASDAQ, ES, Russell, or Dow. But But just looking here, we have relative equal highs above on the dollar. This is last year's high right here, and we were speaking about it yesterday in the group. And this seems like low hanging fruit. This seems like that's going to get hit, but I still expect overall dollar to ultimately get down to this 99.57 mark. So I don't really think this is by any means over this this rally or bull market, as some would say. So still some time, still a lot of time till the election as well. And I really don't expect any sort of, rug pulling in the meantime leading up into that. So short and sweet, but that's overall game planning for what I got on NASDAQ today. Nothing, groundbreaking or anything, but it is interesting to see that yesterday, as we expected, it turned out to be a big old nothing burger. And today, right when that data hit already, we got an immediate reaction. So again, relatively close to getting up into the relative equal highs and ultimately chasing this fair value gap. This is on the hourly, and the hourly also has a coinciding bearish breaker up in here as well. So it's a pretty big range, but this is really where I'm expecting price to go. And from this point, that's where it could be the best short of your life. It could be the quickest stop out of your life, right? That's the way I view these, especially the showtime imbalances, because nothing is really, again, other than this one level, there's really not much suggesting that this is going to be the market crash. Like I saw a couple tweets yesterday about a market crash. I've just had enough of seeing those tweets. It's just ridiculous. But that's just market overview. We got 2 more days left on this monthly candle. Let's see how June finishes out, how the candle paints, and on into the summer months. The way that we currently sit, that's a pretty dang bullish candle on the monthly. Especially next month, if we were able to manage to create some sort of bullish imbalance here, that would be very encouraging for the bulls to get a nice little continuation throughout summer and even early fall. So anyways, that is my just overview on the market as a whole. I want to just check in over on the comments and see if anybody has anything. Let's see. Oh, I hope you guys all heard that. Anyways, what's going on, guys? What's going on? Good. Okay, so as you all know, towards the end of this, we run through some ticker names. I'll start off with a couple that I'm looking for. If you want to drop yours in the chat right now, we can get into it now. So yeah, drop your names that you want to take a look at quickly. We'll rattle these off, and we'll get into it. So first off, let's come on over and let it roll. Where are we? Here we go. I love that little one. See, I'm getting good at it. Okay, first off, let's go over to the name that we talked about yesterday, Tesla. What a beauty. Wow, that was outstanding. So here's Tesla. Still, like I said, I mean, we're creeping up on this high right here. That's at 198.80. We got our second high up there at 205.60, just like we mentioned yesterday. We want to go get those. This has all the makings to be a low resistance liquidity run, meaning that we have 2 areas of buy side liquidity without any substantial higher time frame imbalance in between those. So I do expect those to get cleaned up relatively quickly, and obviously the sooner the better, in my opinion, as somebody who is currently holding Tesla. So yes, really nice. I like the way that it's set up. Here's your right, we might it could be close to over, but here's just my model on a much smaller time frame here from your low after we turtle soup this low right there. Okay, turtle soup is taking out liquidity in the inverse direction of our overarching trend. There it is. There's your run, taking out this high. I don't know why my thing got messed up, but taking out that high right there, that would create my Mando model, low, high, discount retracement, run for highs. Here's our second little buy side target, and then that 205.60. What's the relevance behind 205.60? Not only is it a swing high on a smaller time frame, but also it leads us into, I should show you the weekly first here too. That will fill this weekly imbalance. And also, if we take a look at the monthly, this is where it gets a little funky. See, I have that labeled already, showtime imbalance. So from this point, this is big. If bulls are able to push above and up and through this imbalance here, this imbalance has been filled, this imbalance has been filled, and ultimately, I know this scale or how I have my range mapped. This is from a yearly perspective, but it's pretty clean above this 275.61. So that is the my longer term outlook on Tesla as well. But just to get up into that 205, that is, and it goes all the way to 228, that imbalance. It's a big one. It's a monthly imbalance. So getting into that level will be paramount. And from that point, I don't fully anticipate this shredding through this monthly imbalance. No problem. This could take time as a result of it. Monthly time frame absolutely could take time. And when you have inefficiencies on the higher time frames, oftentimes they take much longer to break down and get through. It's a lot of orders to get filled in that situation. So that would be Tesla. And as I said before, we mentioned this yesterday, and it turned out to be a great one. So all right, let's look at Chewy. Yes, Chewy's been on a little run here. Okay, so let's come on over. Beauty. So this is the last time I charted. I got to fix this a little bit. There she goes. Good. Okay. One thing I need to note, that is a bearish monthly fair value gap on Chewy. Again, this is very similar to what we talked about on Tesla, where I really don't anticipate this getting up and through in one shot. If it were to, it would be extremely, extremely bullish. But not really my expectation in this case. You'll also notice that on this monthly time frame, you have a bullish breaker right here. So you have your low, high, lower low, break up and through. We would anticipate the the range of that candle to act as a support level moving forward. That would also get you into discount of the bullish range. So at this moment, Chewy's not really for me, but we can come on over here and look. Ultimately, I do see buy side targets up there. Yep. So ultimately, from its highs, you'll notice that this is a massive, massive range. So although on a smaller time frame, this would be coming into discount of a bearish area like you see on the weekly here from high to low, right? I'm not very interested in this. And again, the reason why I'm not interested in this is due to the fact that our overarching range is so big. You see where 50% of that range is. It's much, much higher, right? So I'm not really all that interested in looking for a longer term short on this name either. I do believe eventually, whether it's, a move kind of like this, where are we here? Something like that, get into the breaker, and then something like that. I wouldn't be shocked by that, but I don't believe this is a short in the making on a much larger scale. We could break it down to the daily as well. Like I said, I don't really have too much more of an upside expectation for this name. We are getting into a bunch of imbalances here on smaller time frames as well. Massive, massive range. We shifted on the daily right here. So there it is. And we created that breaker down here on the daily. So ready from low to your high. Okay. So as you all know by now, and I'm giving everybody one more day to take care of business. Go watch those videos so we can run through and just show the efficacy of my model that I use. But this doesn't meet the criteria for my model. So with that being said, I'm out on that. Okay, let's go to Microsoft. That was one that somebody else just asked for. Microsoft. So again, another name that really doesn't meet the criteria for me. You'll notice that over the weekends and stuff, I really haven't been posting all of that much of big tech names, and the reason for that is due to the fact that we're at all-time highs. To me, any like forecast of Microsoft going to 560, to me it's just kind of nonsense. We've never been there. There's no liquidity resting up there, so the algorithm's not necessarily driving to a specific point, right? So at this point, Microsoft, it could continue going higher for sure. I'm not here to say that it can't. What I will tell you is it does not meet the criteria for my model due to the fact that we're what are we, like $1 off of all-time highs, or maybe two. Yeah, so not very interested in trading something like this, to be honest with you. So that would be Microsoft. Let's see over here anymore. If you haven't already, please like and share this video. I got a couple more minutes here and then I got to get going, but let's come back over here. There's a few more names that Roblox as well. Roblox is one that I put in the newsletter, which you can subscribe to that for free. Where is it? Here we go. Roblox. This is oh, that's Rocket Lab. Whoops, Roblox right here. Roblox monthly setup is so beautiful. From your low to your high, you got your discount retracement, bullish imbalances. So far, so good. You have one volume imbalance that has already been filled, but that looks really nice. You have 47.20. You got a low resistance liquidity run up to that 53.88. That might obviously, a longer duration type of idea, but and then up to 50% of this range is quite far away. So that would be Roblox on a higher time frame. If we were to break it down into even smaller, let's come on over and there it is. So from your low to your high, here's your discount retracement into bullish imbalance. There is your run for highs. That is the completion of my model right there up to 37.30. So from this point, you would really want some expansion. So at the very least, to fill this gap or this bearish volume imbalance, right? When we gap down, we would call those volume imbalances, right? So we are currently inside one, but there it is. Ideally, if you're bullish on this, you would want to see some more expansion to the upside, fill that up. That gets filled at 39.03. Here is your beauty. Okay. And look at that. That is something. Hourly is gorgeous. But so for me, in this situation here, as you know, to meet the criteria for my model, we have a little discount right here, and that would be the area in which I'd be interested in it. So and that would be also an hourly bullish breaker. Low, high, lower low, break up and through. We would anticipate the range of that candle to act as a support level moving forward. Specifically, in this case for me, I'd want it in discount. So not really an immediate type of idea, but definitely something that I think could get going for us in the near future. So here's Dell. Here's another one. Okay, so Dell weekly wise doesn't really line up and meet the criteria, which is fine. Usually the higher time frames, I'm just using that to structure the overall idea. I can justify an up move here. Why? Bullish volume imbalance right there. Look how perfect that bounce was. Okay, you do have a bearish month or weekly fair value gap right here. Okay, still has not closed and mitigated up and above, but that's okay. So let's come on over here and look at the daily. Okay, very similarly, our little most recent price run here. What was the run that took out these highs? Down to our low, up to our high. Not bad. Okay, so far so good. This is the volume imbalance. This gives you structure, so that's not bad. And decent reaction off of that in the at first glance. So this first run gets you into what? Massive little gap down. There it is. And that's a bearish volume imbalance. That's how we would what's the word? I guess label those, right? Those gaps down are showing you urgency to move lower. We can expect that area to act as a resistance moving forward. There it is right off that. So all the while, again, this is not really one for me either, unfortunately, but this is a bearish volume imbalance, right? Right off 50% of it, we've rejected. This imbalance is huge, right? Below this imbalance, you can ideally look for that low 127. It's going to be searching for liquidity because it didn't have enough to get up and through this on the first try, right? So that would be Dell. So structure wise, not terrible, right? If you were to structure the idea using that imbalance, right, it does lead some structure. The risk isn't really all that bad. What is that? A 3-point potential downside for, at the very least, get you up into here. That's 7 points. Not all that bad. We can go to the hourly to check it out. Right. So here's your little hourly turtle soup. Whoops. Okay. Hold on right there. Okay. Here's your little price run. Whoa. Okay. So just a couple things to note, right? So we turtle soup this. We take this high, we create a bullish breaker. Okay. That's at 142.90. That's also in a bearish hourly imbalance right there. Precision unmatched. But also just worth noting that you do actually have a bearish breaker here on the hourly. High, low, higher high, break down below it. We would anticipate that candle acting as a resistance level moving forward. You got one sloppy pre-market wick, but besides that, no close above, no mitigation, nothing. And let me just put this right here on black. I label the breakers in black. So there it is. We've gotten into it and filled it. So if we were to create this breaker, that actually might not be a terrible idea, but pretty structured. Here's your fair value gap as well on the smaller time frame. Oh, we didn't get into that one. Hold on. We got the breaker though. another one. Low, high, lower low, break up and through. Here's your first little hourly breaker. Perfect. Every move can be justified on this chart, ladies and gentlemen. There's no, oh, but the news. It's all here. And tomorrow, when I show you guys the Mando model, we're going to continuously roll through a bunch of them. And it's just important that if you have time, just go and check out 3 videos that'll help you get through tomorrow, and you'll be able to see it. And hopefully it's helpful. But imbalances, market structure, and liquidity. If you can watch those videos, and again, you don't have to be a master at it, but just have a brief a little bit of an understanding on what they are and how they work, you will most definitely begin to see how price is delivered in a efficient and justifiable way, right? Every single move on this chart can be justified, and I feel like I can absolutely show you that and back it up with claims and evidence. So let's see, are there any more over here? Come on, let's see. Okay, ARM, sure. Let's move to ARM. ARM actually just completed my model on a weekly perspective 2 weeks ago. So ready? Here's your low. There's your high. Here's your discount retracement into your bullish imbalance. There's your run for high. My model is completed. That model completed from, what is this, 80, 85 all the way up to 164. So we doubled up on that. That was a great trade there. Where we currently sit, again, we're approaching all-time highs. We are in price discovery, so not the clearest cut of situations there. Here, we'll go back. Oh shoot, wrong one. Whoops. Here, okay, same situation. Look where we bounced. Come on, guys, come on. Bullish imbalance. There she blows. That also is previous buy side liquidity that we kissed and ran. At this point, I do feel like we can get up to that 177.31. Let's see over on the hourly. Okay, let's just clean up that hourly range because I haven't charted this since it completed. Okay, here we go. Okay, you're going to notice this is a very, very big range, but even on a smaller little blip in time, where are we here from our low? What was the price run that took out? Hold on. Whoops. That took out these highs right here, that low to that high. Discount, wrong. No discount retracement. So ideally, I would be much more interested if it were to give me that. Not all that far away, but at the moment, not all that interested. Does that mean that this can't expand for me? It absolutely could. The difference is, what am I really going to use to structure that idea? That's the question that I have to ask. And right here, you have a bullish volume imbalance. That's about it. Other than that, you don't really have much structure here. So, everything needs to be structured for me, or it's no good. But low, high, lower low, break up and through, also bullish breaker. Okay, look at the precision on that. Break up, respect, run it up, bounce one more time. So yeah, it's not bad. It doesn't really meet the requirements for the Mando model, but if we're just using price rating principles, not bad at all. That's ARM. I got time for like 1 or 2 more. We'll run through those. The 3 that I was telling you guys to look through were imbalances. Yep. That one's like 15 minutes. Liquidity is like 20 minutes, and market structure is 15-20 minutes. Just so you guys can kind of get the framework, because when I go through them tomorrow, I just kind of, it is helpful to run it through. Fat daily bullish breaker on Roblox. Yes, true. 37.30. Yep. I know, Seeker, you were on that. That's a great play. Great call on that one. All right, I'll do Nike SMCI. I already did NQES there. So hard to see chart. Oh, okay, I'll zoom in. Yeah, it's just when it's on YouTube, I guess. Let's go Nike, then SMCI. Sure. Hold on. Come on over here. Nike, are these relative equal lows? Yes, they are. Yeah, I have zero interest in this. I think Nike's going to go here, 88.66, believe it or not. Relative equal lows. Yeah, and get us deeper into discount on our bigger picture. I don't love those lows whatsoever. Not ideal. So now I'm out on Nike. I think it could go lower, and why would it go lower? So not only did you have previous support here, but you also have this. That's a bearish FVG. bearish fair value gap. Okay, and we have liquidity resting down below there. So yeah, not very interested there. All right, SMCI got into your discount of your bullish range right here. There's your bullish imbalance. Very good. This most recent price run, this is an important close for the weekly time frame right here. That bullish imbalance. So that bullish imbalance, of course, price has to be right above it, but right here. There you go, 828. Preferably for bulls, you get a weekly close above that 828 for continuation back up to the upside. You lose that, then it could be a rough couple of weeks here for the semis. So that's what I got there on SMCI. So let me just come back over here and clear it out. So again, as always, if anybody has any questions, feel free to drop them. You know, this same situation. Oh, market's about to open. I gotta get going here. So yeah, so in the beginning of this video there, Casey, in 1 cent, I went over NASDAQ and ES, my game plan for those going forward. So yeah, but so that is what I got for today. Again, tomorrow we'll get into it. If you want to go over those videos, please feel free to do so. I got to get over to Trade Live right now. So if again anybody has any questions, feel free to reach out. If you would share this, like this, drop a comment, we appreciate all of that. This is going to be an every morning thing, so you know, we'll keep it rolling. So I will catch everybody tomorrow.